Welcome back to Trade Pro FX. So today I want us to discuss one of the most common essential things in trading as a trader that each and everyone should know. So today's video is basically to talk how to identify the correct phases of the market. And we talked before and we discussed how the market moves, creating higher highs and then creating higher lows, creating higher highs and creating higher lows. We talked that before, and we are talking about bullish movements creating higher highs and higher lows. But we won't be talking today about this because we have done it before. So I'll just go to the most effective thing that you should be knowing. Those are the three phases that one should know. The first one is called the accumulation phase. So these are how the market follows. These are cycles. Every single time you see the market moving, it follows the accumulation, the manipulation, and the what we call the distribution. So with the three of them, these ones here, they are the essential things that today we will be discussing here at Trade Pro FX. So with these, how do you now start identifying these three of them? So with that, let's dive in. But before that, we already know that I want you to know that with these three phases, when you just start finding or how to identify the three phases, it will help you not only to make money, but it will be of great help in your trading entire journey. So let me now start by illustrating. You see, the market makes the first move, which is an accumulation move, and this move is what is called where the market consolidates, typically after a downtrend or just before a major move. So spotting at this area, we can spot this accumulation area here, which shows that in this phase large players, who are the institutions, all the bigger big traders now are accumulating positions without moving the market. So this area shown here, you can see there, we can see it might look like the market is moving sideways with no clear trend. You can see that area with just marking using the path. You can see the market is moving up and down, create just at a one place. So this point, you can just spot there. The market is trying to move up and down at exactly one point. So at this point, there is no clear trend, and the retail traders often get confused in this phase very much because of lack of clear direction. And this is it is the quiet form of before the large move or the big storm or the market moving very fast. So this is just the accumulation showing a consolidation area. So with that, you now understand how you just identify where the accumulation is being formed. You just wait to see a sideways market. Then from there, now what will happen with next is this clear uptrend which shows now a manipulation. So the first phase is called the accumulation. Then we have this next area here, which let me mark it with this arrow maker. So this whole area now becomes the manipulation. So after an accumulation, the market often experiences manipulation, and in this phase, the smart money or the institution traders, who we also refer also as the banks, all those big players, so they manipulate the market to grab the liquidity. So you can spot that at this area there was a grab liquidity which was swept at this area. See here, the market swept that, went directly up to sweep that liquidity, and the stop outs of majority of the retail traders. Those are the common small retail traders. So if you had crossed your market at this area, your stop loss at this point, it was already taken out. So at this area, this is where the majority or the retail traders place their stop losses. So you would have pressed your first stop loss on that point there, and then it would have already been swept up by this manipulation movement, which is very fast. So with this manipulation setup there, you can see that here at this area here, the price moves unexpectedly, triggering most of the stop losses and making traders believe that the market now is moving on the up direction, as you can see on this chart. So one may think that now the market will move on one direction, and indeed in the reality it is preparing now to change the direction and move the opposite way. So with that knowledge of knowing that after the manipulation, you can see at this area all the liquidity points, all the liquidity zones were swept away, because if you are putting your stop loss, you place it just on the recent high on the left side. So all these would be you will be on losses if you took a trade thinking that now the market will move down. And observing at this now becomes a good area of the accumulation, and this becomes the manipulation where the market has swept out most of the retail traders. So with that knowledge there, now we have understood two major phases. The first one, the accumulation, and the manipulation. That this movement shows that it is about a person may think that the market will go now up. I talked about the up direction. So with that, let me first talk about the next phase, which is the distribution phase. The next distribution phase is when once the liquidity has been taken, the market now moves into this distribution. You can see how the market was behaving in this distribution phase here. So this area, this is where the real price movement happens now, and it is now shows on the opposite direction after the manipulation has taken place. So on this area is the distribution. Traders who understand this phase can ride very well with the trend and make profit movement. So now let's first now at least remove these or just make this arrow maker to move well, so that I can show you now the entry points on this distribution phase, which you can also apply the concepts in the real-time trading. You can also apply it on the forex chart market. So let's push this market here. You can see this candlestick here, the red candlestick here. Let's remove that. So this is the candlestick I'm talking about, this one. So on this candlestick, we can see that there was a bearish movement which engulfed the original or the previous green candlestick. Then again we see another movement to the downside, and all observing all those candlesticks they are engulfing the green candlestick, showing us that now sellers have gained much strength. So on this section, you can see the sellers show a very good trend that now shows most of the engulfing candlesticks being the green, which are already engulfed by the bearish candlesticks represented in red color. So what do? We mark now the key zones where the market seems that the market won't go past that area. So that is the first order block there, and then using this order block, how we have identified it. We have looked at the three candlesticks there, the red and the red and green and red. Then you see this movement here, the accumulation area, that shows that this market won't pass that zone here. We can also spot another order block. We can see very many chances of the market not moving up from this chart, just looking at it as it is. So the first thing to ensure, you can just look at for a fair value gap, but looking at this, we don't see any fair value gap closer there. So if you lack that fair value gap, you just look for other key zones like the order block. We can see an order block here. So the market knows, that the market will come and retest upward to that point where we are marking. So the market will come back to this zone here. So if the market, you just note there are key zones like the order blocks, like these ones being formed there. So you will just wait for a retest to the market just moves to its direction, and then you will wait the market to come back and hit like such a kind of an order block at that point, which that the market won't pass that zone there, and when that's the place, you will place your stop loss and then proceed now with the market trend as it is, because you already know the accumulation part has ended, and then a manipulation area here has ended. So after this accumulation here, you are done, and then you can see at this zone there, the accumulation is over, and then at this point here, you can see this area here. We can see that order block now showing us that the market has come down, and then after coming down, it retrieves, making a retest to the up direction. So with that, we now have a strong belief that now the market will go down. So with that, we can see most of the candlesticks at this area are bearish candlesticks engulfing the bullish candlesticks. So with that knowledge there, we have now the guts now that we can now enter the market. We have seen the manipulation there has taken place, so we have no fear of entering the market after this retest which has happened at this area. So we will just now go directly after you identify that. You just go and pick your short trade. So you'll just pick your short trade and pick a trade to the downside. Let me show you here. You can see the market tried to come there, went at that point, touched at that point. It's trying to break the up direction, but it's being returned back by those order blocks. So with that, we will use this as our entry point, that candlestick. We see another order block, and you can see the red candlestick and the green candlestick there, and the red candlestick which has engulfed that green candlestick. So that becomes our small order block, another order block showing us that the market will continue to the downside. So let me pick the short position. So after that candlestick, we enter the trade moving to the opposite direction, because the three faces have already done their work. So using the short position, you will mark your stop loss to the previous higher high. So let me mark this higher high. So let's pick this. That's the area, the higher high. So I'm going to put my short position at that position. So at that position, I already know that is my stop loss, and then take a good trade to the downside. Moving now with the big boys after the distribution. You can see now we are trading at the distribution area. So the market moves to our trend and our direction that we want. So after applying this concept in any trading, you can just go and backtest. Look for these phases on your charts. For example, after identifying an accumulation where the price consolidate, observe the manipulation phase, then where the liquidity is taken out by traders and the retail traders are shaken out. Wait then and to enter when you see either a fair value gap, which is an imbalance in price created by quick movements, or you just identify key zones like the order blocks to show you that now the market will move downwards. So after you see that, you can enter a trade which shows you the signal to the correct entry trade. So like you see, this one is a sell, so we move with the market as it shows us in this distribution phase. So this is where now you can now distinguish yourself as a good trader who waits for the 3 phases and you trade with the distribution phase. So in that essence, the market cycle isn't very complicated. It's just that simple if you understand the 3 phases and their sequence. And by mastering this concept, you'll be able to trade with more confidence, predict price movements more accurately, and avoid getting caught by any manipulative moves designed to take out your money. So remember this cycle in the next time you look at charts, and keep it simple. Trading does not need to be complicated. So that's it for today.